Welcome back, everyone. Today, I want to tell you guys about why dollar cost averaging is the best way to invest in any stock market. That's right, any stock market conditions. Bull run, bear market, stock market crash, whatever it be, regardless of the conditions in the stock market, dollar cost averaging is the best way to invest, and I have proof that dollar cost averaging is the only sensible way to invest, so stick around for that. Now, the basic concept on dollar cost averaging in the stock market is that you catch all the highs and all the lows and you're somewhere in the middle. Now, before I show you the proof of why dollar cost averaging works, it's not a guess, it's 100% proof that it's the best way to invest. We first need to look at why people struggle to dollar cost average. Why the concept of dollar cost averaging is so difficult for people to participate in. Well, it's 100% because people have a short-term outlook. People want immediate gratification. People may say they're a long-term investor, but it's hard to actually commit to that. And here's why. When people see a bull market happening, they just see everything going green and their eyes light up and they want to go all in because they're afraid to miss the rest of whatever this bull market has. But at the same time, when there may be a bear market going on, there's two things that can happen. One, people see red and they want to try to time the bottom, and so they wait, which is the opposite of what you should do when you dollar cost average. Or instead, they do something even worse and they think that the bottom is in and they go all in when really, if a bear market's going on, it may have gone a lot further down. And now you've put all your chips on the table when you weren't even close to the bottom. So now that we've talked about why people struggle with dollar cost averaging, and again, it's basically because people have a short-term outlook and they don't have the long-term outlook that you need, let's go ahead and prove now in this video why dollar cost averaging is the only sensible way to invest in the stock market. Now, if you join me on the screen here, I have the stock market for the last 100 years, and you can see all the insane amount of ups and downs and ups and downs and ups and downs that this has. Now, let's go ahead and take this graph and draw a straight line through the middle. I'm going to do my best to do that. It may not be perfect. All right, there we go. That's close enough. So look at that. If you dollar cost average into the stock market, every week, every 2 weeks, whenever your paycheck is, and you invest in your set amount, you're going to catch all the highs, you're going to catch all the lows and the middle, and you're going to end up somewhere in the middle on this line that I've drawn. And guess where you end up at the end of all of it? Well, that's right. If you look at the line I just drew, you still end up at the top. You just can't have a short-term outlook. If you have a long-term outlook and you look at this line I just drew, you still end up winning at the end. You just have to have patience and commit to the process. Now, let's say that you were instead part of the history of this chart where we were in this big bull market here and you just went all in over here. The problem with that is that if we have a big enough stock market correction where it goes way down this way before it starts to go back up again, and you invested the majority of your money up here because all you saw was green during that big bull run. I mean, yes, you can start to do the right thing and dollar cost average now, but if you put a lot of your chips up here when we had the big bull market run, when instead if you just catch every high by dollar cost averaging, but you also catch every low. Oh, that was a terrible line. You're basically investing where you catch everything all the way up. You catch everything all the way down, all the way up, all the way down, all the way up. You catch everything where your average puts you right in the middle of everything, and you still win at the end of the day because this, let's say you were a 30-year outlook rather than 100 because no one's living 100 years. If you started investing here and it was a 30-year outlook, and then you invest through here and you catch all the middles, right now you're right here. You won still. And you did that by investing through all of the lows and all of the highs and all the lows and all the highs. And when you dollar cost average and you have a long-term outlook, you catch all the highs, all the lows, and you end up in the middle. But the chart for 100 years of stock market is the proof in the pudding. It's a straight up line like this if you draw through the middle. And if you dollar cost average every week or every 2 weeks, you will be in that middle. You will win at the end no matter what. It's a bulletproof plan. So why don't people do it? The exact reason I said. People with short-term outlooks are not capable of doing this. If you invest in good, wholesome companies that fundamentally and financially make sense, look, this concept doesn't apply if you invest in some risky crap company that could go bankrupt, then you just lose everything. But if you apply this concept to good, wholesome, quality stocks that fundamentally and financially make sense, and you invest in dollar cost average into everything, 40 years later, 40 years later, you're going to end up at the top of that chart because you caught all the highs, you caught all the lows, and you're going to be somewhere in the middle. And guess what? You don't need to be some stock market genius that knows when the top of the bull run is and you sell out. And you don't need to be the stock market genius that knows how to time the bottom, because guess what? No one knows how to time the bottom. That is such a stupid concept. Oh, I can time the bottom of a stock market crash or a bearish market. That's not how that works. Someone may get lucky once doing that and then boast about it on YouTube or boast about it in general to people. But guess what? In the long run, you are not going to be right all the time. In fact, the majority of the time, you're going to be wrong with that concept in your mind. Guess who wins all the time? In the long term, with a long-term outlook. People who dollar cost average. How can you lose if you just consistently invest every week or every 2 weeks with your set amount from your paycheck that you're okay with, budget the amount you're going to put in, and you consistently dollar cost average, you're going to end up right in the middle. And if you believe in the concept of the world continuing to grow financially, and that you believe in the proof of this 100-year chart, that stocks will eventually continue to go up, here's what you're believing in. Here's what you're investing in when you dollar cost average. That you're going up and up and up, investing in all these ups and downs, and you're going to have this. Meaning that whatever this represents, maybe 40 years from where we are now, it means that you're still gonna be up. You're still gonna win. And that's from investing in all the ups and downs every week, just investing consistently, dollar cost averaging. You've got a bulletproof plan here with dollar cost averaging that is proven by 100 years right here. Again, this makes sense if you believe in the concept of the world growing financially. If this 100-year chart makes sense to you, and that the world will continue to grow into the future, then that means that we will continue to go up in time, even if it means that this has to go down a little bit at first. So again, let's recap. Dollar cost averaging into stocks is the best way that you can invest. It's a bulletproof plan that is proven by this 100-year stock chart right here, that you're gonna end up winning in the end if you just average into everything, all the ups and downs. The only time people end up really losing is when they can't stick to this strategy of dollar cost averaging, because their outlook is too short term. You can't have a short-term outlook. And the people that tend to have these short-term outlooks are the people that are looking at their stocks like every 5 minutes and they're like, oh my God, it went down, oh no. The people that look too much are the ones with the short-term outlook. If you just stick to the process with a long-term outlook and dollar cost average, you're going to win at the end of the day. Well, okay, folks, that's all I've got for you. Thank you for watching. If you enjoyed this video and found it helpful, make sure you're subbed to the channel and make sure that you smash that like button. I want to make sure that as many people as possible are able to see something like this, because this is probably one of the most important videos I've made on this channel, is explaining the fact that dollar cost averaging equals a win for you at the end of the day if you just show some patience. Okay, y'all, thanks for watching, and I will see you in the next one.